Welcome to the Fear and Greed Business News Afternoon Report for Monday, the 12th of February, 2024. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, the S&P ASX 200 closed down 0.4% today to 7,615 points, with healthcare stocks weighing on the sector while the tech stocks outperformed. In terms of major companies, the miners and banks were mixed. ANZ was up more than 1%, while Woodside was off more than 2%. Troubled data services company Appen will cut further costs out of its business, including closing its Toronto and Bellevue offices in North America after losing a key contract with Google. That helped the group's share price jump 14% today, though it's still down more than 50% in the past 6 weeks or so. Fletcher Building's share price fell 6% ahead of Wednesday's results. It announced a review including a cryptically worded comment on the building company's CEO and his future. Worse than the day was lithium group Liontown Resources, down 8% after a 4-month clause hampering mining billionaire Gina Rinehart from potentially lobbing a takeover offer for the struggling lithium player lapsed over the weekend, and there was no takeover offer. Hence, the share price fell. And finally, JB Hi-Fi delivered a better than expected profit result, even though profit was down nearly 20%. Its share price jumped 7%. Story number 2, Car Group, which was previously known as Car Sales, has recorded double-digit revenue and earnings growth after completing the acquisitions of US-based Traders Interactive and Brazil's Webmotors last year. Car Group Chief Executive Cameron McIntyre said customers continue to prioritise premium advertising products in a more challenging macro environment. He said the auto market is resilient despite cost of living and higher interest rate pressures, with traffic and inquiry volumes to carsales.com back in December all tracking above the same time last year. McIntyre, when asked about new emission standards, said it's important that manufacturers are given time to adjust. Now, not helping is Australia is a relatively small market for all those manufacturers, and we're a right-hand drive market. That doesn't help either. The company share price closed up 1.5% today, but over the past year, it's up about 50%. Story number 3, haulage group Aurizon today announced an 82% jump in the half-year profit and has dangled the carrot of higher dividends in the future. Aurizon shifts stuff, mostly by rail, around the country. Grains, iron ore, containers. Okay, might not be the sexiest business in the country, but it's a vital part of the economy. Pre-tax earnings were up 26% thanks to higher coal haulage volumes. The result was above expectations. Another highlight of the result was what's known as access revenue. It's money made by providing access to its rail network in Queensland. Not so strong was the containerised freight business, which is mostly carrying clothing, food and machinery across the country and along the east coast. Aurizon's share price closed up 3.5%. Story number 4, oil and gas group Beach Energy was another to report today. It posted a 10% drop in first half pre-tax profit, though the bottom line was a loss thanks to big write-offs. It had to write down some of its oil and gas fields in the Cooper Basin. It had already announced that in January. The group's share price rose 3% today. Kerry Stokes' Seven Group is Beach's largest shareholder. Chief Executive Brett Woods said it was an exciting time for the company with growth projects close to starting production. Woods, who is new to the role, also announced a strategic review with an aim of cutting costs and lifting returns. That's what strategic reviews do. And story number 5, US President Joe Biden and his top aides are closer to a breach with Israel Prime Minister Benjamin Netanyahu than at any other time since the Gaza war began, according to media reports. The US leadership no longer views Netanyahu as a productive partner who can be influenced even in private, according to a report in the Washington Post. It's a critical point in the conflict in the region because the US has proven Israel's staunchest ally. The mounting frustration with Netanyahu has prompted some of Biden's aides to urge him to be more publicly critical of the Prime Minister. Netanyahu angered US officials on several occasions in recent days. He publicly denounced a hostage deal while Secretary of State Anthony Blinken was in the region trying to broker an agreement. He announced the Israeli military would be moving into the southern Gaza city of Rafah, a move US officials are against, and he continues to say Israel won't stop fighting until it achieves total victory. That's not helpful when you're looking for a ceasefire. That's it for the afternoon report for Monday, the 12th of February, 2024. Michael Thompson and I will be back tomorrow morning with the Tuesday edition of Fear and Greed Business News. I'm Sean Aylmer. Enjoy your evening.